As a small business owner, planning for retirement may seem like an afterthought amidst the daily hustle and bustle of running your business. However, taking the time to consider your options can save you money on taxes and help you secure financial freedom. We understand the unique challenges of planning for retirement while running a business. Our financial planning firm specializes in working with small business owners. In this video, I'll walk you through a high-level overview of the most common retirement savings strategies for small business owners. Numbers as of 2023. Hi, I'm Hunter Brockway, founder of Boca Retirement Strategies. I'm here to help set you up for your financial freedom with more money, less stress, and less taxes. Diving right in. The most common and simple retirement savings plan, the Simple IRA, not to be confused with the traditional IRA. The Simple suits small business owners from solo operations to those with 100 employees. The Simple offers both tax-deferred and tax-exempt accounts. In 2023, an employee can contribute up to $15,500 to their Simple. If you're over 50, you can stash away an additional $3,500. Following Secure Act 2.0, these numbers will continue to change as they will be indexed to inflation. Effective in 2025, participants who are 60 to 63 will have their catch-up eligibility increased to the greater of $5,000 or 150% of their regular Simple catch-up contributions. Simple IRAs do require employer contributions. A few caveats and scenarios play into match requirements, but for this video, plan on matching each employee's contribution on a dollar-for-dollar basis up to 3% of the employee's compensation. Of course, employer contributions also have a tax deduction, and now for 3% of pay, you can say you offer retirement benefits to retain and attract employees. Simple IRAs tend to be easier to set up than 401ks, have less administrative work, and are a lower cost option overall, and offer more investment options. Next on the list, higher savings for solos with or without employees, the SEP IRA, SEP. SEPs offer both tax-deferred and tax-exempt accounts that offer higher contribution limits than Simples, but only as an employer. Employees cannot contribute to a SEP and only receive employer contributions. For simplicity's sake, contribution limits max out at 25% of net earnings or $66,000 for 2023. The IRS factors a couple of calculations to arrive at their contribution limit, and because this is a net number, results definitely vary. SEPs also have a much higher employer contribution requirement. Employers must match on a percent-for-percent basis of their contribution to their employees' SEPs. That means if you as the employer put 25% of your earnings into your SEP, you must contribute the equivalent of 25% of each respective employee's earnings into their SEP. Next on the list, higher savings strictly for solo operations. This is the solo 401k. As the name implies, this is for solo operations only. Solo 401ks, or sometimes known as solo Ks or one participant 401ks, are tax deferred and work like an ordinary 401k. A bonus of these plans is the ability in 2023 to save up to 100% of compensation or $22,500. Add $7,500 for catch-up if over 50. Plus employer contributions. Remember, you're both an employer and an employee. Of 25% of compensation, totaling for a potential $66,000. An exception to the no employee rule allows your spouse to count as a 401k participant if they earn income from the business. This strategy does come with the same administrative requirements as a traditional 401k. New on the list for 2023 is the Simple 401k plan, the combination of a Simple IRA and a 401k. Employers must make the same matching contributions as a Simple IRA and have the same contribution limits, but must file Form 5500. Another option if you're just starting out and only have self-interest is a traditional or Roth IRA. These accounts have much lower contribution limits, $6,500 in 2023 or $7,500 if over age 50, and earnings tests, but they offer tax advantage savings for those who want to start somewhere and do not have employer match requirements. Following Secure Act 2.0, these numbers are going to continue to change as they're tied to inflation again. Bonus, a cash-hungry business. If your business has irregular cash flow or is just starting up, you can open a taxable investment account in your business's name, your corporate name. This can be a great strategy. This account functions like a typical investment account you would open as an individual. By doing this, you can keep more cash in the business's name without having it sit in a savings account where inflation can erode it. Moreover, unlike other retirement accounts that impose penalties for early withdrawals, you won't be penalized for making withdrawals. This flexibility allows you to access your funds when needed. Consider which plan has the most benefit for you and your business. Do you need higher contribution limits, more flexibility, or more tax advantages? I'm Hunter Brockway, founder of Boca Retirement Strategies. If you're wondering what retirement plan or tax strategy fits you best, you can book a no-cost call on our website at bocaretirement.com. We are based in South Florida, Western Massachusetts, and work with clients scattered throughout the U.S. Enjoy your successful retirement. Thanks for watching. Bye. One last thing, we are also slowly setting up a retirement mastermind group I am calling Retirementality. If you don't know what a mastermind group is, it's a group of like-minded individuals getting together to help each other solve common problems. We plan to run this group in a roundtable format, so peers can help each other. We might talk about things like finance, things like healthcare, things like travel, things like local events. If you are interested in joining this group, you can send me an email at contact@bocaretirement.com. This will be a complete anti-sales group designed purely in helping you help others retire successfully.